Hi, this is Joe. We're going to go through the S&P and the NASDAQ QQQ today. And I really want to look at it like a follow-up or continuation of the analysis. And I do really would recommend that you go back through the prior video or go back through a few videos and see how the relationships continue to play out. I try and do this analysis without making a major market call. I mean, I know I look out there and I see all the thumbnails. The views, the guys that are getting the biggest views are the ones making the big calls. But the reality is in order to make money in the market, it's not about big calls. You follow your analysis, look for key levels, figure out what the trend is on a single time frame, what the momentum is based on a couple different characteristics, and learn that in one single time frame, and then you can apply it to multiple time frames, and you will get very, very good at this. So that's the goal of this channel. It's not to make a major market call. I think the analysis has been really good. If you go back the last 4 or 5 weeks, I think we've anticipated really well. Let's keep following up with that. Instead of trying to make a market call, just do the analysis and know where the key levels are as to where we're going to make a change in trend or potential change in trend. We're going to go straight into the SP 500, and I've got my 4 charts up here. Before I do that, just make sure you hit the subscribe button and make sure you hit the bell so that you get notifications as well. I'm going to continue to do the analysis on the S&P every Friday, and then I do an educational video every Tuesday on how to trade in multiple time frames using indicators and moving averages. So if we go and look at the monthly chart of the S&P, so going down to the monthly chart, I've drawn in this horizontal line at 33.95. That was the high dating back to earlier this year, and we did exceed it, and now we've come back below it. And I would view it as a fairly key level to sort of keep an eye on as we look at the price action and the trend and the momentum characteristics. Just know where you are in relation to this level, because I think if we can get back above that level for this index, I think that would be a pretty good sign. Let's look at a weekly chart. And what we've been talking about is a potential pullback to the 18-week and support in the 3200 area. We got very close to 3200, and it's trying to turn around. It definitely has found some support. The question is it a real reversal? So we have to go down to smaller time frames to determine that. And I'm going to look at a daily chart right now. So if we go, actually, let's look at the 4 time frames real quick, because one of the things I've talked about in one of a couple of videos, in fact, I brought it up a number of times from my book. There's the pattern with the one time frame. The higher time frame has a 18 above the 40, and both lines are rising. And then the lower time frame is your opposing trend trigger or the sell signal that fails. And in order to get this to trigger on these 2 time frames, a weekly daily trigger for the S&P, we need to close back above the 40. I'm showing you ways to be able to anticipate these signals. If you go down to an hourly chart, I'll show you kind of what we were talking about in the last video. But this is the type of thing that I think it's good confirmation. If we can get back above the 40, that would also get us a lot closer to taking out this 33.95 or 3400 area again. So I'd like to see that happen. Let's take a closer look at the daily chart and recognize that the MACD has crossed back above the signal line. And so that is, from a short-term standpoint, that is a sign of improvement. We've got 1 day left in the week. I mean, if we get a little bit more follow through to the upside, I think this bottom starts to look a little bit more convincing in this time frame. If we go down to an hourly chart, so, one of the things I mentioned last time is, and I'm just going to bring this over and draw this in. So, if we break the trend line, the test really was pretty mild. It was a very shallow pullback, but I think it does qualify. It made it back to the 18. And we had pretty good evidence of improvement on both an ADX and a MACD basis. So I don't have a problem with, getting back long to the upside playing it like this, especially because the daily chart is in a position to turn back to the upside after being a part of that 2 time frame backtest setup. So I view that as a kind of an encouraging sign. And the fact is that we're getting sort of an earlier warning signal based on the hourly 1, 2, 3 signal that things are trying to turn back to the upside. Now, with that said, I think I want to make sure you understand it's not like we've gotten a lot of follow through, and clearly we haven't taken out the 3,400, 3,395 level yet. So while there is signs of improvement on this hourly chart, I don't know that I'm seeing the type of follow through and real buying power that would lead me to believe that it's really getting ready to surge back to the old highs. And just keep something in mind. I want to make reference one more thing. We had a pretty big move to the upside, and then we had a red bar on the monthly chart. Now, if you notice what happened, I want to zero in a little bit. So if you notice, you have a little bit of a tail formed again. So, a week ago, we were way down at the low here, and we were below last month's low and showing a lot of red and showing a lot of selling. And now in just a week's time, we've had a pretty good rally off of this and created a little bit of a tail. This bar now is starting to look more like a pause bar as opposed to a reversal bar. And that's why I said earlier in the month, I said, look, I don't want to make a call until we see how this closes the month. At the time, it was looking really ugly. But the fact is now we finish off this month, and it's really not bad. So a little bit of a pause here is actually, potentially maybe a little bit more weakness, or maybe you just go sideways before we head higher again. So I don't view this monthly chart as all that negative right now. And then, so let's go to the QQQ. And again, while this index is a lot more extended on a monthly chart, and it does have more pullback risk, the same thing is happening here. Look at how this tail formed by the strength of this last week. And so we almost close like the middle of the bar as opposed to at the low end of the bar. So I don't view this as such a bear. It's a red bar. It's a pause bar. But look, we had 1, 2, 3, 4, 5 green bars going up on a monthly basis. And now we've had a pause month. So, would it be healthier if this kind of worked its way down and pulled back a little bit more or consolidated for another month? Yes. And I think there's a possibility it's going to play out that way. But I think you have to take it into context of what has taken place. So this was a negative bar. It was a down month. But if you look at it in relation to what's taken place, it looks kind of healthy to me right now. So we've got to be careful about, I think this is a type of market environment where you just have to stay on your toes, and you don't want to make any real major market calls right now, simply because there's probably going to be some volatility, and there's reason enough for this to pause or pull back a little bit more. But looking at the tape, and if you look at what the market's doing and how it's trading, just to show you, in fact, I'm going to jump to the daily chart because I want to show you something. What's taken place is during this drop here, the NASDAQ or the QQQ was much worse than the S&P, okay? And then during this drop, after it paused and rallied and then moved around here, it actually outperformed the S&P. The S&P dropped at a much faster rate than the Qs did. And then on the way back up here, it's outperformed. The Qs are outperforming again. So, while it would be, healthy to see this consolidate a little bit more, I think you have to read the tape, and you have to know that right now they still have a hunger to buy these big cap leaders. So until that changes, I think you have to be, you have to respect it. Let's take a quick look at the hourly chart. As I mentioned last time, taking out this area here was a change in trend to the upside. You had the 1, 2, 3 and the reversal. Now you want to go the other way. We want to draw in our trend lines this way, and we're looking for a 1, 2, 3 shift to the downside. And until that happens, the bias is to the upside. Now, if we break the trend line, you could exit a long position in the Qs if you wanted. But until we get a 1, 2, 3 shift in trend to the downside now, your bias should be to the upside, in my opinion. So that kind of gives us the update on the two key markets right now to keep an eye on. Please hit the like button, and if you have any questions or comments, please post them below.